blowing dough. Hailstone, Lizzie, Mr. Sober. How you doing, baby? Most dope. Hailstone, Mother Liquor, El Coyote, Blazing Bob, Epic Eric, and S. Jones Jackson, Uncle Nick, baby. Good morning. So, Chad, I hope you're feeling good. I hope you're ready for an exciting day. Again, it's going to be a little bit weirder because, like we're saying here, inline data is kind of being taken as a beat since nothing got worse at all. But, Chad Adonia, let's get right into it. I hope your Monday or your morning is good, your Friday Junior. But now, let me get you the news, and my assistant here, Mr. Josh AI, he's going to help you guys out. And remember, the point is to not be entertained for the first 7 minutes or so. It is to get all of the info. Amen? Amen. All right, I will be right back. Here it is. Here it is.
Wall Street gets relief after inflation report. Stock futures rose and bonds trimmed losses after inflation figures that matched expectations reinforced speculation the Federal Reserve will be able to cut rates in the second quarter of 2024. Equities were poised to extend their February gains after the Fed's favorite inflation gauge, the Core Personal Consumption Expenditures Price Index, rose 2.8% in January, in line with estimates. The report follows a recent jump in both the consumer and the producer price indexes, bringing a degree of relief to traders who had significantly dialed back their Fed bets. S&P 500 contracts rose 0.2%. Treasury 2-year yields, which are more sensitive to imminent Fed moves, hovered near 4.66%. The dollar fluctuated. Corporate highlights. Best Buy reported sales that beat expectations as the retailer made progress toward reversing a 2-year slump amid soft demand for electronics and appliances. Salesforce Inc. gave a lackluster annual sales forecast, but investors were pleased by the company's continued profitability, a first-ever dividend and an increase in share buybacks. C3.ai Inc. reported sales that suggested customers are responding positively to the software company's new artificial intelligence-based apps. Snowflake Inc., a software maker, delivered a disappointing sales forecast and announced that Chief Executive Officer Frank Slootman is stepping down from the role. HP Incorporation reported quarterly revenue that missed estimates, battered by the ongoing slump in personal computer sales. Paramount Global, the parent of CBS, MTV, and other networks, said fourth-quarter sales fell 6% to $7.64 billion, the result of shrinking advertising on traditional TV channels. Binance Holdings Ltd., the world's largest cryptocurrency exchange, said it has recovered $4.4 billion worth of digital assets for its users who mishandled their deposits in the past 2 years. The U.S. Justice Department is scrutinizing the midair blowout last month of a Boeing code door plug on an Alaska Air flight, in a move that could expose the company to criminal prosecution. According to a person familiar with the matter. Inflation data. The number traders have been waiting for all week will finally arrive today, as the U.S. reports a gauge of personal consumption expenditures inflation, a key metric for the Federal Reserve. The data is expected to show the headline and core data both picked up last month, highlighting the bumpy path the Fed faces in achieving its 2% inflation target. Russ Mould, investment director at A.J. Bell, warns that a hotter-than-expected reading could put the final nail in the coffin of the idea of a pivot to rate cuts before the summer. Bitcoin soars. Until then, Bitcoin remains the hottest topic in markets. The digital currency extended gains Thursday after surging above $60,000 for the first time in more than 2 years. It almost touched $64,000 and is in sight of the 2021 record high of just below $69,000. The move is being helped by new demand from exchange-traded funds, which are shaking up the market for the original cryptocurrency. The funds have seen more than $7 billion of net inflows in less than 2 months. Fed comments. Back to inflation, and today's data is under more scrutiny after 3 Federal Reserve officials said yesterday that the pace of interest rate cuts will depend on incoming economic data. Boston Fed President Susan Collins and New York's John Williams said the Fed's first rate cut will likely be appropriate later this year. While Atlanta's Raphael Bostic said he's currently penciling in a cut for sometime this summer. We'll hear from Bostic again today after the PCE report, along with comments from Austin Goolsbee and Loretta Mester. Index confusion. With the stakes so high, the U.S. Labor Department Statistical Agency sowed some extra confusion this week with an email to a group of data super users saying that a surge in a measure of rental inflation last month, a key factor in the jump in price gains, was caused by an adjustment to how subcomponents of the index are weighted. The information has implications for the path of inflation in the near term because the adjusted weights could keep readings on rents elevated through the first half of the year. Top overnight news. The Supreme Court's decision to take up Donald Trump's bid for immunity from criminal prosecution raises the prospect that a trial to hold him accountable for trying to overturn the 2020 election could face a lengthy delay, potentially until after the November election. An Illinois judge barred Trump from appearing on the Republican presidential primary ballot. marking the third state to impose such a ban on the former president for his role in the insurrection at the U.S. Capitol on January 6. Ben Bernanke's global savings glut is drying up. Long-term interest rates worldwide may be heading higher as a result. China banned a top-performing quant fund from the stock index futures market and vowed tighter oversight of high-speed trading, expanding a crackdown on computer-driven investment strategies that some have blamed for exacerbating market turmoil. Wall Street traders bracing for key inflation data waded through mixed economic figures and remarks from Federal Reserve speakers for clues on the interest rate outlook.
On the interest rate outlook. Thank you. Thank you, Josh AI. That's it. That's it. Again, everything was pretty quiet today. We were just waiting for the PCE. I do got a little bit more. S&P futures, they are up by 0.2 Thursday morning, trading near the best levels after today's inline PCE report. Comes after U.S. equities finished mostly lower on Wednesday. NASDAQ was down for the sixth time in the last 8 sessions, with big tech lagging. Treasuries mostly weaker with the curve steepening. Dollar flat through yen, the strength biggest FX story after latest Bank of Japan comments. Bitcoin futures up another 3.4 after recently surging through 60,000, and WTI is up by 0.4. Remains to be seen whether the right inline January pre-CE inflation report shifts this week's more defensive tone. No, a few higher profile tech earnings underwhelmed after the close on Wednesday, while bond yields continue to back up. Some focus on stretch long positioning, month-end pension rebalancing as overhang. However, markets are now in line with Fed on pivot expectations, though that has also thought that sentiment has swung too far given broader disinflation traction. Street taking S&P 500 price targets higher on better earnings and growth backdrop, though some scrutiny surrounding former given megacap tech contributions and potential for margin reversion. Buybacks and passive flows mentioned as supportive, though some skepticism about the extent to which elevated MMF holdings will flow into stocks. Headline core January PCE came in right in line with expectations, month over month rising slightly and following January CPI, while year over year ticked down a bit. Market has reacted positively with removal of fears from a larger jump higher. Personal spending also in line with personal income better. Initial and continuing jobless claims printed a bit higher than consensus. Pending home sales report yet to come. Fed speakers today include Bostic, Goolsbee, and Mester, along with Williams after the close. Congress struck the deal to punt spending expiration deadlines out a week. A few overseas developments in focus. Eurozone inflation data mixed with France a bit hotter and Spain largely in line, though broader disinflation trend intact. Bank of Japan Takata said central bank needs to consider ZERP exit. CRM full year 25 subscription revenue guide below, but margins, capital return, and green shoot comments positive. Snow down big on softer product revenue guide and CEO transition with valuation another headwind. MNST boosted by GM strength and strong 24 start. HPQ missed on PCs. BBY beat and raised dividend, highlighted paid membership growth. HRL highlighted retail volume strength. Celsius beat, but expectations are high into the print. Okta beat, boost beat by raise that helped dampen concerns about October security incident. PSTG beat and guide largely in line with full year 25, despite some concerns about guide down. Duolingo up big on continued daily active users, and Booking beat. Para helped by progress on DTC improvement. AI up big on subscription revenue, and then AMC missed and warned on Hollywood strike impact. Oh no. Don't worry, there's more. So Fed officials voice support for rate cuts, but emphasize data-dependent stance. Bank of Japan board member Takata says price target coming into sight. Odds of March rate cut firming. ECB more flexible framework to complement balance sheet reduction. Bunds Bank chief Nagel says ECB needs to stay the course until more comforting wage data. Bank of England man says prices increasing, driven by people who do not feel the impact of higher rates. RBNZ governor confident on inflation trajectory. BLS suggests surge in January CPI on rental triggered by adjustment of how subcomponents weighted. Stronger U.S. economy, vibrant growth boost, tax revenue, potentially stabilizing debt to GDP ratio. U.S. applications for home purchases dropped for a 5th week in a row. Global savings glut threatens to turn into a deficit, leaving long-term interest rates higher as a result. Falling inflation in German states points to another national decline. French inflation eased to the weakest level since September 21. German job losses increased more than expected. UK business confidence dips, but firms plan to increase hiring. Bank of England mortgage data points to momentum in UK housing market. Japan industrial production unravels post-pandemic recovery. Retail sales remain lackluster. Australian retail sales recover, but growth remains tepid. New Zealand business confidence index slips. Inflation pressures ease. Apple resellers in China slashing iPhone 15 prices on prolonged demand slump. Salesforce quarterly sales, dividend cushion, weak outlook. Snowflake slumps on CEO retirement, softer product revenue guide. HP misses first quarter revenue on sluggish demand. FAA sets 90-day deadline for Boeing to create a quality control plan for 737 MAX. Disney and Reliance announce merger of India TV and streaming assets. Congressional leaders avert weekend shutdown, plan to wrap up funding bills in March. Supreme Court to hear Trump immunity claim, likely delaying his 2020 election interference trial for several months. Chinese ultra-long bond yields plunging as investors bet on more monetary easing support to the country's shaky economic recovery. Chinese regulators tighten scrutiny of financial derivatives and high-frequency trading. Hamas chief calls for march on Al-Aqsa Mosque as hostage talks struggle. South Korea and U.S. to begin defense cost-sharing talks in the near future. China Wang Yi invited to Australia as Beijing and Canberra ties thaw after prolonged frost. And then Japan should fully lift arm export ban. Ex-security chief. Ba-da-bop-bop-bop. Not bad. Not bad, Chatadonia. Not bad. Like a lot of headlines, but not really. Again, the data, people thought it was going to be hot. It came in line. In line is the new beat now, apparently. We got a couple of pre-market movers. So we got 21% on Okta earnings. Bank of America upgrade. PTSG or PSTG up 10.2 off of earnings. HRL is up 6.7 off of earnings. CRH 5.9 off of earnings. HLN 4.7 off of earnings. MNST 4.7 off earnings. NTNX 3.7 earnings. Best Buy 2.6 earnings. SQM 1.6 off of earnings. AppLovin up 1.3, 19 million share offering. Enphase up by 1.0, nothing. CRM 0.3 off of earnings. STER up 25 to be acquired by First Advantage, and earnings RNA up 21.2. Earnings oversubscribed 400 million private placement. ESTA up 19.6 off of earnings. Duolingo up 19.2 off of earnings. AMRC 15.2 earnings. AI 14.7 earnings. CPRX 14.4 earnings. Verx up 12.2 earnings. Janx up 11.8, 4 million share. What is that? Secondary offering at 46. GDRX 8.2 off of earnings. IGT 7.0 to combine global gaming and play digital. Pavo up 5.8, nothing. Opera up 5.0 earnings. ALTM 4.5, nothing. Sound 4.1, nothing. NFE 4.1 earnings. Pizza 4.1 earnings. BTSG 4.0 off of earnings. DFH 3.7 off of earnings. PAGS up 3.7 off of earnings. GH 3.0 off nothing. STRL 2.6 nothing. 4.24 up. NVTS up 2.4. APPN up 1.8. BPMC up 1.6. PARA up 1.5 off of earnings. SCTL up 13 or 134 to be acquired by CoreRx. NRBO up 53%. Recovers first site RB approval in phase 1 clinical trial. FL or JL up 43%. Special dividend of aggregate of $6 million. VYGR up 21.5 off earnings. NXKU NXU up 13.7. Signs letter of intent with Electric Outdoors. AHT up 12.0 off earnings. Spec 10.5 aims to achieve production rate of 500 core units. Lex is up 9.8 off nothing. MRSN 8.2 Wedbush upgrade. VRCA up 8.0 earnings. RVNC 7.9 off earnings. DCGO 7.1 off of earnings. PLCE they're up 6.7, announces 78 million interest-free unsecured new financing. ACHV up 6.3, reaches agreement with FDA on long-term systemic exposure data requirements for NDA submission. PBYI up 5.0, CAPT up 4.8, EVRI 4.6, merger with IGT and earnings. EBS up 4.6, Tisha 3.0, AAOI up 2.7, REKR up 2.7, Nova up 2.5, Gilt up 2.4, ESPR up 2.3. Bitcoin stocks all trading higher. Same with China names. Snow, they are trading down 22.8 earnings. CEO change. BBWI down 6.9 earnings. Celsius down 6.0 earnings. MDB down 3.7. Snow Sympathy. ESTC 3.1. Snow Sympathy. VFS down 3.1. HPQ down 3.9 off earnings. Datadog down 2.6. Snow Sympathy. CFLT down 2.5. Snow Sympathy. Budweiser down 2.0 off of earnings. Ferg down 1.7 and Nettie's down 1.6 off earnings. GFL down 1.6, 17 million share offering. GTLB down 1.5, Snow Sympathy. Everg down 0.5 off earnings. Kemmers down 37, delays quarter 4 and full year 23 earnings results. CEO administrative leave. Dava up down 32.8 off earnings. IRWD down 29, phase 3 trial once weekly in adults with short bowel syndrome meets primary endpoint. Stock is down though. XMTR down 27 earnings. DV down 18.5 earnings. FIGS down 14.8 earnings. CFO to step down. SDGR down 13.6 off earnings. FA down 12.9 earnings. NARI down 12.0 earnings. IONQ down 11.3. SHLS down 11.0 earnings. GRFS down 10.7 earnings. AMC down 9.8 earnings. Click down 8.5. Mara down 7.5. C1 down 7.4. ARQT down 6.8. 15 million share buyback. Iova down 5.9 off of earnings. SDRL down 5.9 earnings. Forward 5.9 earnings. PTLO down 5.0, 8 million share offering. X-Ray down 1.5 off earnings. Swin down 25 off nothing. Weight Watchers down 24% earnings. And Oprah Winfrey board transition. B-Fly down 23 off earnings. MIST down 20 offering. LPSN 19 earnings. CLLP common stock offering down 13. Beyond down 6 off Argus downgrade. And then a bunch of other stocks trading down lower below 1 billion and market cap. Wow. Chad, that's a lot of plays. That is a lot of plays. So not too bad. We got a little bit. I'm going to be watching a few plays. I'm going to be watching Okta, Snow, Duolingo, all of the big earnings beats from yesterday. Keeping an eye on Disney. Again, they've been announcing a couple of stuff here and might be able to outperform. Then Mara and Coin, just keep an eye on all the crypto plays. IRWD, I think that was the bowel drug. They had good data, but they dropped, so watch for a bounce. Figs, another CFO step down. Snow got clobbered off that. Then CRM and AI, just two hype plays there. CRM, a little bit more hype, but less... More quality, but same amount of hype. But we'll see how that one plays. But Chatadonia, I think we have enough time. I need to go grab me a water. I don't know if they got a commercial break for me, though. So let me check, but get ready. And yeah, we'll be right back. Follow me on Instagram
so we really
at the
don't
Trading
know,
Fraternity.
but to
I will
your
see
point,
you in a
it's
little bit,
exactly
baby.
right.
The
I don't know
morning's
if
about
markets
to
are focused
start.
on it or not,
Get your plays
but
ready.
neither
Good morning.
party is
Happy
really
Friday,
serious
Junior.
about reining in deficits.
Well, I don't think markets tend to focus on this issue, do they, Julia, until the ratings agencies really, as it were, make a very, very clear noise, or bond markets revolt. So, Julia, when you look at the deficit situation in the United States of America, just give me your top line on the risk at the moment, because it is forever increasing.
Yeah, the deficits are wide, and that is sort of projected to be the case for the foreseeable future. They're not widening, so it's not a constant accelerating force. And it means somewhat higher interest rates. We've seen that. But it doesn't really reflect any concern about the dollar or the stability of the United States, at least not yet. The dollar's very strong. So I don't really think it's an issue, the main issue for markets. The market's done well under both of these guys, and with widening deficits. I think it's really more about the resiliency, stability, and strength of the U.S. economy. And that so far has continued to outperform. So I really don't think that the deficit is the main or will become the main issue in the election.
No, I mean, there is something relative to the rest of the world. The US economy is on fire. It is turbocharged relative to the stagnation in the United Kingdom and the flatlining and even negative aspects of some of the German economy. Thank you so much for joining me this morning. That is Gershon Distenfeld and Julia Coronado on the markets. Coming up, your morning calls, and a little bit later, we'll dig into the markets on the equity side with Vinky Chadha. He joins me shortly. But the market implications from today's inflation report, that conversation ahead on the flows at Deutsche Bank on Bloomberg.
Love it, love it, love it. Chatadonia. All that being said now, you got your data. Inline is the new beat. You got another day. Again, most days, I think 6 of the last 8 days, we have kind of opened up red, so that'll stop this here. We're going to get a little bit more action, but Chatadonia, you're here right now. I hope I see you for the rest of the 7 hours, but you are here right now in the moment. Tell me in the chat, what is your first play of the day? Post it in the chat, baby. Let's go. Celsius, Coin, Spy Calls, Meta, Babysit, Snowput, IWM, Wolf, PSNY, AI, It Was Gold, Snow Calls, Tesla, Apple, Beetle Calls, First Solar, MSTR, 10-Day Scalp, Snow, Tesla, Disney, ONON, Tesla, NVIDIA Calls, Snowputs, Coin Calls, ALB, Sit on My Hands, BKTX Law, Josh Calls, NVIDIA Put, Tesla Call, Mara Call, Altcoin, Sound, NVIDIA Put, Spy Put, CL Dip, Disney Calls, 112, AI Calls, SMCI Put, Long Crude, NVIDIA Put, Holo, SoFi, 9.5 Call, Netflix, Coin Calls, Averaging Down, Joshi Calls, Hood Calls, AMAP, Palo Alto, Spy, UWMC Calls, Beto, SMCI, Spy Put, Palo Alto, NVIDIA, Smashing the Like, Delta, Red Bull, Altcoin, Pelosi, Bets, Beyond Put, Carvana Puts, Palo Alto Calls, Coin Calls, Sound Calls, Mara, Swing Trade, all of China, close the calls I made yesterday, Baidu, Long Heavy, Cashing in Snow, Baidu Calls, MODCA, Meta, Kava, Holding Doge in the final plays. Inverse Kramer, Spy Puts, Biden Puts, Fade the Pop, and sell BBY shares. Wow. Well, Chad. Look at that. We've gone through all the a lot of plays, honestly. I can see today everybody is all over the place. Everybody is all over the place, man. So we're going to see how it all plays out. But Chatadonia, welcome to the cult. And here at the cult, before we do anything, there is something more important than enriching ourselves, and that is paying homage to the most special group of American citizens out there who have made our freedom possible, have made sacrifices, whether or not they have agreed with the current administration or not, whether they agreed with society or not. They made a commitment to serve for their country, and those people I am talking about are the veterans of the United States of America. So on behalf of the cult, the people here, the people not here, I want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country and their families for real. Thank you for your service. Thank you for your commitment, and I encourage all of you to show that love and appreciation day in and day out till the day you die, because we don't give enough love and appreciation to those vets. So veterans, thank you, and big shout out to anybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the garbage men, the coaches, anybody making their local community run. God bless you, baby. That's where it all happens. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Son of the Jets! Oh, it's game time, baby. Horna, let's go. Good morning, Chatadonia. Good morning. Good morning. Y'all ready for a good one? Are you ready for a good one? Let's have a good one, my friends. So there it is. I already go over the plays. I did. All right, we got a minute and 45. A minute and 45 to like the video. Let's get that 1,000 likes, baby. Let's not run shy. I don't know. I think there's like 3 post earnings I might go after. Other than that, I'm going to be watching some of the more broader stuff and then just, I think, post earnings. So I don't know. It depends on the prices and the plays, but you're going to want to like that video. So let's get out here, baby. If you have any questions, you let me know. You need anything in the chat, you post it. Oh, we're almost at 1,000 likes. There you go. A lot better than yesterday. So, Chad, you got about a minute. Like that video. Make sure you're subscribed. Is there any questions? If you're not familiar with the data, PCE came in line. And the fact that people thought it would come in hotter, in line had a very positive reaction. This is our first day in a while where we are actually opening up in the green. So let's go. Less than a minute. We're almost at 1,000 likes too, baby. So close. Let's go. Let's go, baby. God bless you. Good morning. Hype train. Let's go. Shout out the Chad train. Let's go. Congrats. Yeah, again, Okta. That one's getting. Okta was up a lot more. Snowflake. I think you guys should have 1,000% on your snowflakes. They may have just fell out the money, but like I'm saying there, the post earnings, we may get an opportunity. All right, you got about 30 seconds, 20 seconds. Like that video. Oh, we need like 30 more likes for 1,000 before the bell. And 15 seconds left. Oh, my goodness. The report came in and it's good? Yes. It came in line. So the fact that it didn't surprise anybody and people thought it'd come in hotter and it didn't, it ended up being in line or positive. It came in higher by 0.1. Round 1. Fight. Alrighty. And we're off. I'm going to take a look at those snows. Snow option chain isn't open yet. Oh, what was the other one? There's Duolingo too. That one moved up a lot. That option chain is open. Oh, but they are not letting anything go through. The Duolingos are up 50%. For now, again, there's Snow, Duolingo. What was the other one? Wasn't there one more? Okta, duh. I forgot. I don't know where our Okta plays are at. The Oktas are only up 100%, 50%. Yeah, again, that's like the 5th time that's happened. But that one, we did go out of the money. So, again, I did go higher. I think 2 standard deviations would have actually hit. I just went for the 3. So, keep your eyes out for that. There's Snow. Where's the crypto plays? Coin. I still have those Maras. I got them Brian Maras. I'm down on those $2. So, I'm down as much as Brian donated to me. A little more. Thank you, Brian. I love you. Mara, you got 150? My Octas ain't. And if 150, did you go closer to the money? Celsius, yeah. Celsius wasn't bad. Celsius just had a high expectation. So, yeah, like low-key, Celsius is moving. That one could be a decent one. Let's see. Did that fill? All right. Ethereum 3,500. Oh my goodness. AI halted. It might. I don't know. But I made a play. Do we have 1,000 likes? How we looking? How we looking? AMD rocketing. Where's the other chip makers? We have 1K? Oh, there you go, baby. All right, not a recommendation. You will lose money. I have the, what's it called? I grabbed Celsius $90 calls for March 15th. I grabbed one of them at 20 cents. Not a recommendation. You will lose money. Alrighty. SMCI, I was just looking at those. Yeah, 863. That's a big bounce from yesterday. Where are the arms? And again, Celsius, I grabbed those for 20 cents. I think those are good for now. And then those squares are still up 100. Let's see. EW. Oh, Vanny, I forgot about that one from yesterday. A couple of the other bios still moving. Yeah, those Celsius is doubled already. That Celsius was a good pickup. Again, Celsius went from red to literally Celsius went up 5. Literally, that stock has gone up 5% since we bought that. That's insane. It was literally negative when we were doing those plays. My goodness. And then ARM 137, Eli Lilly, ouch. Yeah, watch if ARM goes crazy. Airbnb, VKTX is on the low. I don't know. I don't think healthcare is doing too hot. Nasdaq's up 0.8. Russell's the leader, 1.3. S&P is up by 0.5. And then Dow Jones up by a quarter, a little bit more. Weight Watchers came up 10. Oh, shit. It did. I'm still down on that one. I'm only down $400 comparatively. I was down $1,000 at one point. Oh, where's CART? I forgot those puts are moving around. But yeah, Celsius was a good pickup. Yo, my Celsius call just disappeared. The hell? Wait, Celsius halted? No way. Oh, what the hell? Yeah, Celsius is halted. I'm going to say my option just disappeared. I did not buy any Vanny shares today. I did yesterday. Wait, why is it halted? That's the weirdest thing ever. Unless they haven't had their conference call, but yeah, literally paused due to volatility. That's the weirdest thing ever. Nah, dude, that's weird as hell. So literally our calls just went up 100% in about 3 minutes, and then the stock got halted. Well, I'm glad you guys liked the video, though. You see, that's why you like the video in the mornings there. Amen. Amen. SMCI 880 now. That thing's running. ARM chilling. I don't know. NVIDIA's kind of going crazy, too. Disney 112. That's big. So remember, 112 here. Isn't this the level? Yeah, I believe 112.50. So watch out here. Disney, I mean, it might be able to break out, get a little bit of a run in the next week, especially if that holds. Again, Celsius is halted. I have no idea why that happened. We got to play in there. Snowflake, they're bouncing. Again, Okta, they sold off a little bit. Okta, your cars are barely up. The ones near the money, though, are doing good. AI's on the high again. Mara's trying to break out. Snap on the high now, too. Snap is up 11.19. And then Airbnb 157. ARM is running, but I want it to follow with SMCI. SMCI is really going crazy. EW. What was that one play from yesterday? Oh, the Netflixes came down. The squares are up. Or was it NCLH? NCLH still up, but they came down. Bro, why is Celsius halted? That is the weirdest one out of all of them. Sold West Weight Watcher call. Are you selling cover calls on those? Not a bad strategy. Yeah, they've recovered 10 from the bottom. Snow on the high. No data pending, no. Redfin up to 8. Or no, they're up 8%, 6.5. WMS on the high. GM, ACAM. GM breaking out. Bro, Airbnb is doing very well. Is it the highest it's been? Yeah, Airbnb is about to hit a new 52-week high. Again, 158 leading into 160. Enphase up 6.5. And then Bonds is barely holding on. And then SPY's up 0.4. Russell's killing it. NASDAQ is not doing bad at all either. MPW is climbing up. And then Square. Bro, those Square pickups were great. I thought they'd go up a little bit more, but those squares are 30 cents to $1 now. That's been a good one all week. Enphase, I have no idea. And then, bro, if Airbnb hits 160, we're going to love that. But Airbnb is about to hit a new 52-week high. That's like a subtle runner there. Mara's holding up. Booking's still down. Where the China plays. Square keeps running. Let me know when Celsius. Oh, never mind. Celsius open. Bro, that's the weirdest thing I've ever seen. So Celsius literally almost 500%. 20 cents. It's now $1 on the ask. Bids at 40 though. It's back, but I have no idea why they just halt. I've never seen a post earnings halted with no news or anything. Like literally nothing happened. And then Mara's starting to break out. Brian shares are coming back. Woo! Love you, Brian. AI dumping. Oh, yeah, I wanted to see Baba and Baidu. Yeah, Baba's still up a little bit, but the China names ain't getting love. Again, I think it was NetEase today. They had earnings. It wasn't too hot. ONON going up. Yeah, they're killing it. AI as well. AI got its first down candle. And then Coin down. Mara wanted to break out. And then watch SMCI. They just had a pretty gnarly run. Six, two. Airbnb 159. MPW above 432. So watch if the chips turn around here. That'll be the other one to watch for. Data in 3 minutes? I don't know. Oh, pending home sales. I believe. I do think we have real estate data. And you have Chicago PMI. You have Chicago PMI in 3 minutes, and then in 15 minutes, you have home data. Airbnb, I mean, at this point, I would just argue they had the best earnings out of any of the travel names. That's it. Otherwise, again, like their earnings were good. Wall Street was weird with it. They didn't dump, but like go look at Expedia, go look at Booking, any of those other names. They all did bad. Bonds got a huge little rocket here. HRL Foods ripping. HRL, yeah, Airbnb 160, man. Haven't seen that in years. But I'm down with it, man. I'm down. Yeah, Hormel's up 16. Very good call out there. All gold miners up. I'm seeing Airbnb. Yeah. So Airbnb, that's great. It's literally, it's on the top end of its range, but it hasn't been here in years. But you got a small little gain on Airbnb now, and then do every account. That's good. That's helping out the long term today. Let him do its thing. At LAN. Where's those Celsiuses at? Hormel's still going. Again, PMI data. It's regional, so it's not going to be too crazy, but that comes out in a little bit. And then Bond just had a random rally out of nowhere, outpacing now the SPY, still underperforming the NASDAQ. And then Celsius, that was a weird-ass move, bro. I think it's because our contracts were going to 1,000%. So, yeah, Celsius is our 100% in holding. Again, Square, you got a nice one. $87. Am I buying Fubo for earnings? No. We might. I mean, we'll see when we do the run-up. I did Weight Watchers shares for earnings, so you never know. Mara flipped after about to go green. Same thing with Coin. Okta, 110. Unfortunately, our contract is still kind of neutered. You only got 30% on that Okta. We were too far out. Then Square still up there. Leader of Yemen Houthis. We introduced military surprises in our Red Sea operations, which our enemies won't expect. Did they just give an earnings report? Like, what? Why is the leader of the Houthis talking? Like, what? This makes no sense. Chicago PMI 44 estimate was 48.1. So Chicago PMI is a little weaker. And then Airbnb sold off after hitting 160. NVIDIA a little bit off the bottom. SMCI. ARM. Celsius going up again. VTNR. That's Square still or PayPal? Both of them. MO's even up. Pfizer. Disney. Baidu starting to move up. Gold is up 3. We're holding Vanny. Yes, for now. I think on the next like crazy pop, I'll probably get out of it. So, but it's not really moving today. It went up a little bit, but way more moves yesterday. Like I said on the watch list, I found out Vanny is an old company. Have you guys ever heard of remember I said it yesterday? Have you guys ever heard of a company called Second Sight? It's called C's Eyes, Second Sight Medical. It's literally them. So they reverse split and changed the name. I've known about this company since like 2014. So they used to work on like eye drugs. That's why it makes sense why they had an eye drug and then they have that other GLP one. But it is like they've been working on eye drugs for a while. Yeah, eyes and ears, they were eyes. So that's why when I was like, wait, the CEO, I was like, well, how is he running this company? It's because it was the same company. Celsius. That was a good one, honestly. I mean, we got to sell the pre-earnings run-up on Celsius, but literally that plays almost 20 cents to $1. It's very volatile, but that was a good pickup. Celsius 52-week high now. I got you, bro. I got you. Let's see. COG-T went up a little today. Still down. I don't know. I don't think biotech land was too excited. Where's the other one? There's only one biotech I wanted to see this morning. Ironwood. Yeah, these guys, they dropped 33% and their data met one of the endpoints. Surprisingly. And then 10-year, 30-year bond still breaking out. SPY coming a little lower. I don't have VWAP up today. SPY, damn, we almost hit 5,100. I guess we already pumped it up around there. But you're right there, right near 5,100 this morning. My goodness. SMCI trying to come down a little bit. Yeah, pending home sales in like 12 minutes. Google on the high. Iova on the high too. Is inflation back? I mean, not off of today's data. Everything was just in line. Again, people were prepared. Excuse me. People were preparing for a really bad data set today, but the fact that it came in line, that was good news. So everybody's expectations were so high that now, you know, in the at the margin was seen as good. Yeah, the hiccups. Oh my goodness. Yeah, Chicago PMI came in a little lower. Bonds started moving ahead of that. CC halted. See if BNB comes back up. Netflix trying to climb again. I sound like a pig. I'm still holding my breath. CC on hold. Chemers, they had bad news today. I read that in the morning. Again, Mara dumping now even more. Bonds still going again, and Okta. Maybe the Oktas will wake up. And then Celsius, that one's killing it. Literally 75 cents on the bid, $1 on the ask now. I sound like a squeaky toy. Is the Okta scammy? No, I think Okta, we're just far out the money. That's it. Because remember, I said Okta has a lot of upside, but I didn't want to spend a dollar on the contract yesterday. And we got more time. So now they're climbing up a little bit, but like I'm saying, I think the 110s, these would have been your contracts. They're going for $1, but you only made like 300 on them. Let's see. Canada to require visas for Mexicans starting February 29th. Says Mexico, there's Celsius. Killer post earnings, man. Killer. So yeah, that's literally 500% in the last, 20 minutes? 20 cents to over $1 now. Nice. See, I'm glad you guys liked the video. See, right? You guys see that bright and early? Y'all did good, man. Y'all did good. Oh my gosh, with these hiccups. You can ghetto spread the Celsius, I think, because I don't know if that one's going to hit. I guess we're closer to it, but you can ghetto spread the ones below, get 100% and give yourself $500 of upside. Mara, I'm clapped on it. What made you decide to trade Celsius? They were down 5%, but their earnings were good. So I said it right when I played it. Somebody called it out in the chat. They were like, Celsius is moving up. And I was like, they were down, but their earnings were good. And then right as I looked at it, it was right at break even after gapping down. So I figured if it already recovered 5% earnings, it may have to come out. And then I looked at the contracts, and all of them, they had the premium kill. So like these were the contracts I bought. They were remember, we sold out a lot of these yesterday. They were going for 70 cents, 80 cents yesterday. This morning at the same price of yesterday, they were going for 20 cents. I literally bottom ticked them. So the idea was, though, post earnings, negative play goes green in the first couple of minutes. That's usually a sign. Sometimes it fails, but in this case, ended up working out. And now I have the hiccups. Nice to meet you. Why won't this go away still? What the hell is happening? Celsius call starts in 8 minutes? Oh, no way. So there's still a little bit of a catalyst there. You need a Celsius. I'm kind of down. I have them in my house. I haven't drank them in a while. I mean, I'm kind of down though. You made progress. Octa Snow Celsius. Thank you. There you go. I'm glad, baby. Glad to hear. There was definitely hitters yesterday. Like I get to experience, missing out on some of them. Octa scammed, but we kept it cheap. Octa's still good, but those prices and where things ended up yesterday, I think that was a really good opportunity. So hopefully you guys have been learning off that. Weight Watchers, they came down. They bounced up a little bit, but still overall down. Nvidia's up. SMCI, stay in pin. ARM 2. Uber pop. Yeah, Uber's at 71. Again, watch Disney, that 112.50. That is the upside level. And then literally Airbnb hits 160 and then just comes down immediately. Bro, I'm still hiccuping. This is a long, drawn-out hiccup here. AMD on the high, Microsoft, now Meta. Meta, big candles. Watch out, all your big cap names. They may start to run up here. I've done the hold breath thing several times. It's just not working. I'm going to go to the bathroom. I'll hold it while I go to the bathroom. Get some water. I need to maybe move around. I think I'm going to go grab a Celsius. Let's celebrate a Celsius today. I'm down with a little bit of caffeine. We could get rid of this. All right, I'll be right back. Follow me on Instagram at the Trading Fraternity.
The transference is to the broader market. As inflation is behaved, disinflation remains the narrative, so the broader context of the Russell expands by 1.3%. That's the dependence on rate cuts for the Russell narrative. The rest of the markets remain firm. Nvidia also strong on the day. So at the moment, yields down, stocks higher. The correlation is very real. Stocks are rising. We'll hand you over to the rest of the team for your trading diary. In the meantime, Raphael Bostic speaks a little bit later this morning. We'll get more Fed speak. Goolsbee, Mester and Williams reaffirming, I suppose, the long road to cutting. Dell reports the earnings after the bell. Friday, University of Michigan consumer sentiment, and we get the ISM manufacturing. That's it for Countdown to the Open right here on Bloomberg from New York. I'm Manish Krenny. The rest of the team will carry you through the rest of your trading day. Good morning.
Anywhere you go look, there's going to be a shortage of welders. There's a big learning curve with welding. Virtual reality simulates that exact muscle memory. I want them to get out into the field. I want them to make good money, and that's what this does.
I want to become welders? Bro, what the heck? Let me go to the bathroom.
Cataracts are the primary cause of
what the fuck? Bro, these are meta...
To address the problem. Virtual reality helps provide the training at a scalable level.
That's crazy. Bro, those are just meta ads. I thought that was an ad for like ITT Tech welding school. That was an ad for Meta. Bro, that's kind of wild. They're making all these virtual reality things. What stock is that? Meta on the low? Or on the high in the bottom right? Yeah, Meta is literally popping. Oh, you got real estate data in 2 minutes. I was trying to hold my breath. All right. Well, I wasn't done going to the bathroom. I was trying to hold my breath. Everything's just moving so fast. On PTN, buy more, sell for loss. Only on 25 shares. You could sell for a loss right now. I do think there's a chance it comes up, obviously at the risk of it going lower, but I'm down to hold it for a little bit. I think yesterday, I don't think our price was too bad on where we got in. So I talked about this on the watch list. If you didn't know, second link, very good, especially if you're making plays and you're curious about the plays and what's going to happen, especially one I've talked about a lot. That one was the last couple days, but like I said yesterday on it, probably going to hold it for a little bit. But if you don't want to take that risk, you can sell out whenever. Because, again, the catalyst, the whole data thing, that has already passed. Mara earnings were good, but then again, Mara's earnings are very, it's one of those like non-gap type beats. So like if you look at their metrics, like the rate of change is very good, but like they still lose like a lot of money per share. You know, like it's so they're adjusted and non-adjusted, gap and non-gap. So I think gap was bad, non-gap was really good. Oh my gosh. Arm pop. I thought you said arm poop. Nivda. Bro, bond's still running up. Pending home sales down 4.9. Estimate was up 1.5. That's really good. So market might like that. Pending home sales just collapsed. Some people were expecting -2.5 though on the month over month, but then year over year dropped too. What's the year over year number? 1.3? No, that has to be from last time. Yeah, month over month was down 4.9. Estimate was 1.5. Some people, Trading Economics says down 2.5, but I think that is good data. Again, today, inline data, no surprising reaction to the downside. This time around, again, weaker economic data, inflation not coming up, messing things up, or again, the real estate prices staying up. That's a good sign, or at least the sales not going up. Chug water. I've been drinking a lot of water this morning, but the hiccups just clapping me. Atlanta GDP now falls to 2.9 from 3.25. Celsius starting now. You guys want to listen in? Oh, I didn't even grab one. I said I was gonna get one.
The year-over-year perspective. On a core basis, 0.4 rise, 2.8%. But both of those lower than they had been. The disinflation story continues. Personal income was up a great 1%. A lot of that due to the dividend payments that went out at the end of the year and the beginning of January. Wages and salaries were also up a decent amount. The dividend thing is kind of interesting, Katie, because what we saw was a big increase in portfolio management. Again, Wall Street's been doing so well that it is contributing to inflation. We were up 5% for that category of inflation, also helping drive it. But as you can see, the percentage change is much different. Housing and healthcare as they have. But we didn't get the big housing pop that we saw in the CPI, which made people feel better. So what now? Well, we've got more data coming up. But Jay Powell is going to be the issue going forward. He testifies on Wednesday and Thursday, I believe, of next week. And we will be carrying carrying that live. That's really going to be the risk moment for markets in terms of the Fed trying to reset perceptions.
Yeah, he'll actually be testifying during this show, so a lot to look forward to there. What could we expect him to say? What do you think the tone of that testimony will be?
Well, after this PCE report comes out relatively decent, and we did see December revised lower, he can make the argument again that inflation, progress is being made on inflation, but there's still more work to do. We have a little bit higher monthly inflation in January, so we want to wait and see if that continues into February. We'll get a February CPI report before their next meeting. And so I don't expect a whole lot different, but markets have been very interested in whether or not the Fed is going to give them guidance about May, June, or even in July as a first rate cut. So we'll see what he has to say.
And it's always fun to hear what lawmakers ask Jerome Powell as well. So that should be a lot of fun. Bloomberg's Mike McKee, thank you so much. And let's take a deeper dive into the markets right now, because I'm pleased to say we're joined now by Mandy Zhu. She is head of derivatives market intelligence over at Cboe. Joining me on set, Mandy, it's great to see you.
Great to be here, Katie.
So it's a big macro day, and it's interesting. If you look over the course of 2023, it feels like the FOMC, CPI, some of these jobs days, they turned into non-events. That's changed a little bit year to date. If you take a look at some of the numbers here, what does that tell you? Is that maybe a sign that broader volatility is coming back, or how are you reading that?
So what actually stood out to me was in the lead up to today's PCE was just how much, there was lack of fear across all asset classes in terms of levels of volatility. So if you look obviously at equity vol, VIX in the low teens in the lead up to PCE, but not just equities. If you look at credit volatility near historic lows, FX volatility also multi-year lows. I think what that shows is that investors, yes, sticky inflation clearly is still an ongoing risk, but on the back against that, people are weighing, better than expected economic data, and I think that's why markets have been so resilient year to date, is that even though inflation, as we saw today, it's coming down, it's making progress, but it's still sticky, but overall economic growth is picking up, right? And within equities, earnings have been great. So I think against this backdrop, people have gotten a lot more, I think, constructive.
And when you think about, what we're seeing in the VIX, what we're seeing in some of these skews, do you view that really as complacency or exerance? I mean, how would you characterize the fact that you don't see a lot of demand for these downside hedges?
That's a great point. So to give you some perspective, measures a skew in the S&P, so that measures the demand for downside puts versus upside calls.
8,000 milligrams of caffeine
recently, right? So there's very little demand for the downside protection, and there's actually right now a lot of demand for those upside calls.
200 milligrams?
Perhaps. But one thing I would point out, and I think that is kind of what is underpinning this flat skew.
I want to listen to it, but the Celsius thing is on right now.
Over the past 2 years, markets have been more volatile on up days than down days. It's very unusual. Typically, we think about stocks, crashing lower and grinding higher, and over the past 2 years, it's been the opposite. We've seen grind lower, moves and then rip higher, right? Think about Q4 last year. Yeah. So against this backdrop, I think it's not surprising that people are turning more to call options to help manage that upside volatility, that upside risk in the market.
Should that make me worried? I mean, when I hear that, it sounds like, okay, maybe we're entering this crash up environment again. You're really not seeing the demand for...
I don't see the Celsius one, though. So we'll see. But other than that, we're still holding up from the... PCE gains, some people talking about real estate. Again, pending home sales just slipped there, so that's somewhat good news. Kind of helping out, but pretty much, once again, data could have gave us something. It didn't, and now we're going to be looking ahead for the next things. Lennar is up 1.8. Lennar, Pop, SMCI coming up. You guys said ARM and Vanny. ARM is near the high. Yeah, Vanny woke up. Yeah, we need that thing back in the 4s. Yeah, Meta's looking really good. Again, 491. I can't believe those ads were Meta, bro. That was crazy. PSTG, that was another earnings. Pure Storage. So they're still killing it. Celsius holding up. Disney and Airbnb look the same. SPY going lower. So, again, chips are going up, some of them or most of them, and then SPY is lower. Russell is the leader. Dow is close to going red. We're kind of in that same setup. It's been about, 38 minutes? How is volume on this day-to-day? 7 million. It's better than the last couple days. It's only been 30 minutes. Remember that one day we did 5 million in the first hour. Airbnb shares are positive on every account, yeah. Even our highest average, but like even on some of the other ones, like I don't know, like I think Colt YouTube and Colt Sister, they might be up like 6 to 10%. Let's see. No. Yeah, you have 6% on the YouTube account for Airbnb. And then, let's see, Colt Sister. Colt Sister, Airbnb. It's up 2.7. So the YouTube account has the best one. AMD, 52-week high. AMD kind of taking off from here, and then SPY, a little bit of a Chicle. That kind of messed up VWAP a little bit there. Let's see. Celsius still. AMD is rocketing. My goodness. Check if like Intel, I know Micron's down. They were the leader earlier in the week. Airbnb up 75, 77. Hell yeah. If you bought the dip on Airbnb, I mean Airbnb, it's one of the top performers, from those $80, $90. Again, held up in, I think, top 5 stocks last year. AMD, Intel kind of moving. A-Dill, that was the one yesterday, I think. A-Dill was a biotech from yesterday. They had data. They're still continuing. So watch out for that one. That one might be able to come back to life. Again, Vanny just dancing around, but nothing new. MGNI. Mara getting flushed on now. Damn, I came back and then I got flushed on that. Yeah, gold is doing very well considering, all the dollar. Bro, SPY is flushing. So interestingly enough, your chips are holding up, but my goodness. So literally you just sold off a decent amount of the opening. You are still very elevated from when PCE came out. So to give you a general idea, you're still up 1/3%. And then that's like what? That would still be higher than the PCE thing. So very, very big. No news hit. I see West concerned about Russia rekindling Moldova's frozen conflict. No, I don't see anything coming out. People are talking about the oil ban stuff, like Russia banning the exports, but I don't think that's like causing this. And then especially unless we get like an immediate energy move, it might be, but for now I'd say no. NVIDIA to 800. I want to see if the chips actually come down here. So again, like the other days, you would watch chip makers go down and everything else. Today now, we actually had a little bit of strength, but now you're watching the chips hold up and then everything else kind of sell off. So very interesting compared to the last week and how we've opened up and traded. UVXY on the high, it's still in the red. NASDAQ still up. Everything up except the Dow. And then Russell once again outperforming. Microsoft still in the green. Apple about to go red. Amazon was looking good. Netflix went red. Square. Vanny. Oh, Vanny's kind of moving now. On the high ticker. My criteria for averaging up. Pretty much everything else needs to be up. Pretty much no alternative, right? Like Abivi, there was a lot of names that were up at the time, and then even the names that were down, I didn't want to add to them, so I averaged up on Abivi like 130. So just really depends on like relative valuations and then how I feel about something more or less. Yeah, Vanny's awake all of a sudden. And then SPY still selling off, man. So literally, you just gave up half of that 0.3 now. I would say half of the gains pre-market you've now given up. I think once you get over here, you drop like another half a point. Netflix flushing. But literally like half of PCE gains have now been given up. We are still well above where the PCE came out. No news or anything. REITs are still up, surprisingly. Square or Celsius. Celsius contracts are calming down, but the stock's just holding. Coin flush. I know Mara's flushing. Yeah, coin's down to 197. Yeah, all the crypto plays. Honestly, I don't even think crypto's up. Crypto's down intraday, but up overall. Oh, sell the Airbnb calls? I forgot about that. Maybe. Let's see where they're at. I think these are still the same price. Yeah. I want more contracts. I want to sell above here. I want to sell above 220. So I'm down to wait for a little bit, but the idea is there. Because again, we could sell cover calls on Airbnb. You're gonna be able to pull in like $1,000 to $2,000 off that. Celsius calls. I'm up 100% on them still, but the stock is up. The premium's definitely calmed down. Coinbase. You want to put the entire YouTube account on black and video roulette? Not bad, not bad. Maybe in 30 years when we're ready to sell it, and then we'll see what happens. But for now, I'm liking the long term. We got Airbnb up. You got Redfin climbing up today. You got all the Ubers, but we got a deposit in a week. I'm down to keep building. Yeah, 420. Vanny's waking up. I mean, I'm down with it. What's our break even at like 460? So we're right there. Pre-market was just the what's it called? The PCE, and it came in good. It actually didn't come in moving at all, but everybody was so cautious that it was going to be hot after CPI. PCE coming in line just instantly sent the market up. The one thing this morning that I thought was weird is that everybody ignored personal income. Personal income went up by 1%. I thought that was very suspicious. That was the highest personal income reading in the last 12 months, I believe. Yeah, bonds are selling off right now. Just literally when the market sold off, so did bonds. Bonds are doing better than the SPY, and now I guess technically bonds are outperforming the NASDAQ. Some CI still holding. ARM. Is that beyond on the high? They got a downgrade today. God bless the call, baby. Pay the plug. Biggest day ever. Oh, man. Way to make the biggest day ever. Amen. I love it. Welcome to the markets, baby. Vanny's all-time high was 562. It wasn't. It had a reverse split. I think they were as high as like $40 when they were I's. So I remember trading I's back in the day. I'm telling you, this stock blew my mind yesterday, but I don't like it as much after finding out this is a company from like 2014. So this company has been trying to get an FDA approval for 10 years. And then now they got an Ozempic one too, mixed in with dry eye disease. Vanny. Vanny is eyes. If you remember a ticker called eyes, yeah, that's Vanny. They just switched the name. It's eyes is Vanny, Vanny is eyes. You're wondering why you're charged. That's what I was saying yesterday. I didn't know I got filled because I was like, wait, why does it say I have these at this price? And I was like, none of this makes any sense. And I was like, oh, it may have been an old reverse split. But then, like, I realized I had like one share or a couple shares of eyes back in the day. And then it all switched over. But I never realized it. A wildfire in Texas becomes the largest in state history, growing nearly 1,700 miles. Oh, man. GCT, didn't they buy someone today? And then Weight Watchers came right back down. Unfortunate. A lot of names are like that this morning. Senate Majority Leader Schumer aims to pass short-term funding bill as soon as tonight. Majority Leader Schumer says he hopes for final passage of stopgap funding bill by this evening. NVIDIA on the low. SMCI and ARM holding up a little better. Celsius, dude, I can't believe they halted it. I feel like without a halt, that thing would have been going even crazier. But yeah, it's the contracts are chilling out after this thing staying pinned. Celsius, we have a lot of time on it, but that one, bro, that thing was moving, and then it just caught. But those contracts are not getting juiced the same way. Baba on the low. Watch out again. VWAP got messed up. Bonds have been selling off since the market has. Visa, MasterCard, Discover. They're on the low. Remember, those were doing good the other day. You said on earnings, the 13%. That's kind of what they did. Yeah, but Celsius, we didn't buy the pre-earnings. So when we bought Celsius, I mean, we bought it this morning. It was trading at like $68. So but that's why, like, we got our contracts cheap. We're still up on our contracts over 100%, but the general idea was, like, 10 minutes ago, those contracts are going for 500-600%. Now we only have like 100, 200, even though the stock's still up. Yellow on that long-term caffeine play. I am drinking a Celsius right now. It's very nice. It's very nice. And the long-term is hitting another high today. Again, Airbnb, Disney, a couple of others. I would like to see Airbnb go back up, though. That would be nice. That would be nice. 40 cents away from breaking even. Nice, baby. Let's go. I think we are breaking even on there now. Like 446 or whatever. Coin stock. SQM on the high. Didn't they have something? SQM had something, or it's a sympathy? There's Tessie. Again, NVIDIA. I guess NVIDIA's up too. It just doesn't seem as strong as the other guys. LT growth stocks. PayPal, I think that's my only growth stock I like this year. It was Disney, but now we're up like 25% on Disney. So I do think I think PayPal or maybe like Alibaba, even though it has a dividend, but that depends how you want to take it. Watch if ARM breaks. I'm looking for ARM 150. That's what I really want to see. I would add MO, yeah. I mean, I'm thinking either MO or Pfizer by Friday. We could let it wait a little bit, maybe give it a week, but I do have a deposit coming up. I'm thinking either MO or Pfizer. Why don't you like Tesla growth stock? Because it's still expensive. So you're not buying it like cheap at like a lower growth rate. Like you're still paying for Tesla at a price as if it's going to keep growing a lot. So like if I wanted growth, I want like a real good deal on my growth. It's kind of why like it took us so long to make money on Airbnb, because we bought it at a higher price. It had to grow into the valuation, stuff like that. Celsius, Vanny, I hit another high. Coin may have growth, but the only problem with Coin was it was just at $40. Buying at, I mean, I'm almost green on my $200 positions, but I don't know how I feel about them at that prices. VKTX selling off. So we're back to green on Vanny from yesterday, and then that's getting a nice run. My target for Vanny, like I said, I just get one big, I think the next sell-off or next like run-up, we could sell off. So just like yesterday, I told you guys, speak now or forever hold your peace. Pretty much all of these pops, it's either we get above here. I am looking for another $6 test, probably around $6 is where I'm looking to get out. But other than that, or if I really feel unstable, you get out now. But I'm kind of down to let it ride. And again, I'm coming off some gains off the first set. I have a couple of REITs. We have IRM, MPW, and O. And then Mara still clapped. Mara's actually moving around, though, all things considered. And then ARM is climbing. ARM about to hit 140. Let's see. SPY back at VWAP. Again, Vanny had a nice, that's literally like $1 and change rally. Again, yesterday it literally sold off around these levels. It hit the 5, the high, or the middle 4s, and then went a little crazy. Cowie, what up, baby? IRW. I kind of wanted to play IRWD because their data met the endpoint and they're down 38%. I'm kind of like, yo, that doesn't make any sense. So I'm pretty sure IRWD, their data was actually good, but then everybody just dumped it. I guess some people are saying the results are mixed. Yeah, this 2 secondary goals failed the study. So primary endpoint was met, but then their secondary endpoints missed. Oh, ATUS, I forgot about that. Celsius is good. We still got 160%. It was up 500 at one point, but it's kind of starting to stay pinned now. Let's hit him with the ghetto lockup on Vanny. I don't know if it's going to have too big of an effect. I don't think we're able to confirm that even like the ghetto lockup, we don't. It's all superstition. Well, I don't know. You think it works? I mean, I could try it for you if you want. I'll put my Vanny shares. I'll put them up for sale at 100. I got you, bro. I got you. And then who's the other one? Airbnb. Oh, Square. Oh, those came down. LH on the low. And then SPY right below VWAP. Bonds came up a little bit. So again, remember, bonds and markets sold off there, but bonds are closer to a new high. Now bonds are outperforming everything except the Russell. What'd you say about Vanny? I put my shares for sale at $100 a share. It's the ghetto lockup. It's just kind of a superstition on some of these plays that if you put your shares up for sale at a higher price, nobody could borrow them against you. So, different results. Sometimes some people think it has an effect, some don't. So that's why somebody asked me about it. I did it for them so that they could see it and maybe it works. Maybe it works. Maybe it doesn't. Celsius dump. Womp womp womp. Just watch after that halt level. See how it trades around there. Doge running. I mean, we were just talking about that yesterday. Yeah, now I'm only up 70% on the Celsius. Bro, that was a hitter. They were like, hold up, halt it. Vici on the high. Yeah, ARM won't get above 140. That's what I was saying. Last time I went above 140, it went crazy. I want that to 150, you know? My Shiba, I have no idea. All I learned yesterday is that, like, I mean, technically, I think I bought it higher, but my Coinbase does say I'm up on my ETC. But that was the thing that shocked me. I was like, damn, ETC is literally like, I bought ETC at lower prices. But a lot of those, even the Stellar's coming up. But the way all of those shit coins are moving kind of has my mind blown. But we did even talk about Doge a little too. We bought some ETC at 80. I think at 60. But then we also bought some at like $19 as well too. So that's why I'm like, it says my average price is $19.50. I think my average price is around 30. I think that's like the true average. But my goodness. That's why when I'm looking at it, I'm like, damn, that actually all came back. So I guess there's a little bit more, but I'm down. I mean, it's not like I needed it. You know, the whole idea, all of the trash portfolio in crypto, if all of those come back up again, oh my goodness. But I will look to exit if that does happen. Yeah, Vanny's still holding. SPY right below VWAP. Tried to short MSTR. Maybe shares. There's just a wide spread. Puts would be a little crazy. Nat gas numbers just came out. Where'd it go? Or a couple minutes ago. I swear I just saw him. And then Sky News Arabia tweets, Biden considers conflicting narratives about shooting during aid distribution in Gaza. 50-50. Like when we say that, 50-50. Good, good, good. Rhino. God bless you, bro. Good morning. How you living? RXRX on the high? And Forum, where's 4? Remember, they had that buyout offer yesterday, or people were rumoring it. Tesla, DYN on the high. Biden, Israel, Hamas ceasefire probably won't start by Monday. Well, remember, that was some of the good news people thought at the beginning of the week. Where's oil? Oil's still kind of elevated, down, barely moving, honestly. I kind of missed those days where oil was moving 4 or 5%. DYN on the high, CRM breaking out. Oh, I forgot about CRM. Yeah, CRM's starting to move a little bit. Will that fill? Goolsby or Bostic? We'll get either. I mean, again, I don't think a Fed reporter has moved the market in a long time, or a Fed speaker. Crazy, crazy. You know, like they were moving us a lot more, but until the data really changes or that dot plot, I think these Fed speakers are duds. That is the craziest part about all of it. Wall Street bet says Celsius to 100. Maybe that's why they halt. I can't believe they halted it for no reason. And then it just literally loses all that steam. So we'll see. But I made a play. This play, I was talking about it yesterday. Not a recommendation. You will lose money. I did a CRM, Salesforce, March 15th. I grabbed one of the 345 contracts, call for 30 cents. So remember, I was just telling you guys yesterday, I like the upside on CRM. But remember, I was telling you there's a good chance we could pick up every one of those contracts for a big discount. Well, these contracts are going for $2 yesterday. So even this morning, they were going for 50 cents, even as low as 15. They're kind of all over the place, but I'm down with one of those. I spent about $30. So if they break out here, if they kind of do with the Celsius, start off small, then start to move, maybe we get lucky there. So $30 post continuation, but it's just literally cheaper. This was like trading the pre-earnings, but now 90% off. Well, Celsius, we'll see. Our calls are still up, but literally they popped up first 5-10 minutes of buying, and then they spent the last hour just slowly working their way down. They did run up a lot. Celsius did. They just were scamming, though. It's okay. It's okay. I'll take it. But again, I like the CRM. I hope our deal works out. I mean, again, CRM, if they have the ability to go crazy. I just wasn't willing to pay for it yesterday. So now, 2 standard deviations back to $30. I'm down with that. Octo is nice if we got closer to the money. ESTC, ACAM. I think ACAM has earnings. ACAM has a bunch of new contracts. Looks a little suspicious. Yeah, I think people are buying sound for the earnings. ENVB. This thing was going crazy earlier. Literally, Enveric Biosciences. ENVB. So this thing was already up. Let me double check what it was. But they're popping again. NASDAQ popping. Root on the high. What is it? NVIC signs non-bonding term sheet to pursue exclusive out-licensing of 3 compounds. They have an AI drug, too. The company's Prisberry platform computational chemistry and AI drug discovery system. They're talking about licensing it out. So yeah, ENVB, they're licensing it out, their drug development technology or some drugs. Bostic, they're all the same. Maybe I'm just becoming too much of a reductionist, but I do think that they're all going to say we don't like the recent data. We got to go slow. We're not confident, but we're going to cut rates at the end of this year. So I think Bostic he's usually bullish, but he'll throw in one hawkish statement, talk about cutting rates, maybe talk about QT, and then they move on. SMCI breaking out too. ARM, NVIDIA is trying to climb up. ARM above 140. What do you mean Bostic has been historically hawkish? I strongly disagree with that. I don't think he's been historically hawkish. I think end of 2023, he was even bullish when a lot of other people were hawkish. I don't know if you know Bullard, but remember when Bullard was talking 5-6%, my man was talking about that being too much and thinking that things are looking a lot better. Bayer proposes Jeffrey Urban as member of supervisory board. Bro, literally ENVB, biotech with licensing deal, they're shooting up. All right, man. That caffeine and all the water are already hitting. I need to go to the bathroom again, Chad. They're playing the welding commercial again. I can't believe this is a damn Netflix commercial or Netflix Meta. SMCI breaking out, ARM, AMD, all those chip makers going nuts. Bro, SMCI is pretty unreal. That's 9% today. My goodness. Let's see. Welding simulator. I told you, welding simulator. I remember watching that on TikTok, but now Meta's making ads about it. ARM on the high, SMCI. So again, the mega cap chip names, AMD, ARM, SMCI, NVIDIA, they're all just going nuts here. Because like SPY and Bonds are in their own little world. I'm sure you could tell right now. And then Russell's leading, but all the chip makers are doing their own thing. Let me see. The chips are scamming. Just more broadening out. 50-80. Everything's just taking turns.
Though for an
The Ozempic revolution.
typically have to take it
Follow
within
me
a
on
certain
Instagram
number
at the
of
Trading
hours
Fraternity.
of eating.
I will BRB
And so
my
as
friend.
opposed to giving it weekly, you have to think about when you're taking it in the course of the day, and that may be trickier for people to comply with.
What did you learn about whether they can use this in kids? Because child obesity is a big problem as well.
It is approved for use in children, and the American Academy of Pediatrics actually, in their guidelines, say that for children 12 and up, it should be part of the options that are explained to parents. All options should be explained, including medication and surgery. And for these kids, you think, oh, kids are just overweight. No, they're pre-diabetic. They're taking heart medication. These are people with the comorbidities that adults have. Plus, they're going through adolescence, so they're being teased for their weight. So this could really be a game changer for kids who are, where bariatric surgery was the only other option. This could be another option, but there is one big caveat, and that is trial data is only available for 1 year in this age group.
So you wonder about the long-term
impacts,
wonder about the access and who's paying for all of it. Right.
And in the doc, we take a look at two families. One of them right now would like to take a GLP-1. Their daughter is being teased every day. It is impacting her mentally, in addition to physically, and the family cannot afford it, so they are just not going to take it.
And what about broader indications or more? I mean, even the idea, the potential ability to curb alcoholism, I mean, is that a real thing?
Yes, because this works with the brain. So it basically makes you not want to have too much. So for alcohol, for drugs, for all sorts of kinds of addictions, this medicine is being considered and investigated right now.
All right, Melissa, stick around. We're going to get a bit more on the stock impact, of course, of these weight loss drugs. It's a conversation we've had before with Jared Holes of Mizuho Securities. He's the healthcare strategist there. And, I mean, we've talked about this with you on set as well. Lilly and Norvo, the front runners. I assume you believe that will continue for some time, Jared.
Hey, David, thanks for having me. Yeah, I think these are the two front runners for the next several years.
Are they talking about giving Ozempic to kids? Like, not like for who need it for diabetes, but for weight loss? Bro, ENVB, that one's running. So, again, they have a licensing agreement, just a small cap biotech. It'll probably go until the money runs out or the hype runs out. So kids don't get bullied? I thought they don't bully anymore. Like, I thought they just, get weird with you on the internet, but in school, they have to be really nice to you. Ozempic I'm pretty sure Ozempic is like $1,200 a month, $1,000 a month. It's like $250 a shot, and you need 4 shots a month. Yeah, it's expensive. You obviously don't know many kids. Well, I am an adult. I know my nieces and nephews, but they're kind of really young. But yeah, well, I just go off the internet. I thought we don't bully as much anymore. I thought that's why we kept getting canceled. I mean, we got rid of all of these things. We canceled all these people, and then kids are still getting bullied, and they have to take Ozempic. Like, what? Celsius. Watch ENVB and ARM and those chip makers. Those are the number one spot. CRM came up a little bit. CRM and Celsius, I think those are good post earnings. We'll see if Celsius, I want to hear that conference call, but I couldn't find it. They have online. That's why I thought it was more online bullying. But even then, though, that's crazy. They're talking children as young as 5 to give them Ozempic. So I don't know about how like other diabetes medicines work. Like I don't know if there's kids on them that young. But again, if you have diabetes, it's one thing. But they're saying for weight loss. Fed speakers soon. I think in a couple minutes. And then SPY getting a little bit of a green shoot. Bonds about to hit the high. Maybe Bonds hit new high as SPY gets above VWAP. Vanny, it's another biotech. So again, you got a couple of these runners here, ENVB and Vanny. And then AMD, that was Terran before anything. Bostic, Eat, and Goolsby. I like Goolsby more than Bostic. I didn't think I'd like Goolsby, but Goolsby has grown on me. I don't know, something about Goolsby. He's fun to listen to. I think he likes his job. I don't know. He seems kind of nerdy and like economic nerdy, and I like it. Oh, where is it? Where is it? I'm trying to see the Bostic one. It says it's live. Fireside chat with Jennifer Burns. He's done like 3 fireside chats. No text. Yeah, there is. That's why I'm like, I see live Q&A. I see there's going to be an interview. So it's going to be interesting. We're not going to get the pre-written text, but I don't know. Bostic Mace. If it was a chart that showed, it looked like a biotech, like my faith in what these dudes are going to say, it has just dropped off completely. Because again, a lot of it is just, they say rate cuts, say good things, say one thing bad, and then that's it. And then just move on. UBS, big red candle. Down by 0.42. It's still up by 0.42, but they just sold off like 20, 30 cents in one candle. UBS. You think pharma companies are the next bubble? No, pharma's been like this. I've always said it, like, even when like GameStop and when the market moves crazy, like pharma has been doing that forever. So like pharma trading well above valuation, that's happened since the beginning of time. When they fail, they die. When they do good, everybody overpays for them. I mean, go look at Eli Lilly. Go look at Ozempic, or any major drug recently. So I think it's just always going to be like that. Yeah, Moderna. There's a lot in biotech land, but it's either a lot of buyouts or a lot of failure. That's it. But you're not really. I don't think it's going to cause like a bubble. VLCN. All right, we'll put it up. But please don't pump it. I see homie keeps donating there. It is up 78%, so GG. I hope it works out. But be very, very careful. By 2040, I read 40% of adults will have some form of cancer. My goodness. SPY moving. Well, we're still in this weird data reaction. I mean, keep that in mind. You know, you had PC this morning. No surprise, got us shot up here. We're still maintaining those gains, too. There's Vulcan, ENVB, and then Vanny. Those are your random runners today. And there's one more. Ironwood is just clapped. When was the last time they were at 8? Fed Bostic, inflation came down much faster than I'd expected. Fed Bostic, last few inflation readings have shown it's going to be a bumpy path back to 2%. I believe he said that last time. Over there it is, February 29th. Where is it? It says there's a live stream. I don't know. I think we might have to pay for it. Usually it's being, this is by the Atlanta Fed. They should have it. Bostic says we have to stay vigilant and attentive. Last few months shows is going to be bumpy, coming back to 2. Yeah, paper Fed is a real thing. Hain. ENVB's coming back up. Bostic probably appropriate to reduce policy rate in the summertime. Yeah, I think we're going to have to wait for Goolsby, but I can't find this one live. But he is talking right now. Classic Bostic. That's bullish. It's very bullish, but he said this before. I think last time we heard from him, but he's saying, you know, that's more bullish than not because he's advocating for a quicker rate cut than not. Yeah, but he said this before. That's the thing. That's why I'm like, all of these guys lately, no matter what they say, I don't think anything's new. So in this case, Bostic, that is bullish, but no reaction here with bonds or SPY yet. We get data in 3. What data? Kansas City Fed? The Bank of Chicago. Yeah, IRM, that one's crazy. Yeah, first time he said it, we were at 460. Yeah, I mean, when he would say it when we were lower, the market would love it, but as of lately, it's still the same story. Bostic says economic data will ultimately be our guide on when rate cuts start. There's data. There's Kansas City Fed manufacturing. Yeah, that just came out right now. Literally -4. Estimate was -2. I don't think it's going to cause a real big move. But there is something. AM Dizzle's still climbing up here. ARM came down. IRM's been going all day. These REITs haven't been too bad. You think it's going to be slow throughout the day? I mean, kind of. We might get bigger moves because of the data today, but I mean, after these Fed speakers, like later in the day, middle of the day, it may slow down, but I think the range might be a little bigger. I mean, we're already trading a little differently than the first couple days of the week, so that's at least good news. By do low the day. What's up, bro? Crazy how small the world is. What's up, man? Small world. Cold world. Won't lie. Won't stop till the races won. Volume's a little better than yesterday. Still kind of lower, though. So remember, we've been getting some low volume days. I mean, we are, what, an hour and a half in, and we're at 17 mil in volume, which is good. The other day, we were doing like 5 million an hour. So we would have had like half this volume yesterday. Yeah, Kansas City Fed manufacturing, actual 3 -17. Kansas City Fed composite -4. Microsoft announces public preview of Microsoft Copilot for Finance. So again, I think that's part of the AI stuff, no? The Copilot thing. Microsoft announces public preview of Microsoft Copilot for Finance. All right. I got Goolsby. There's no audio, though. These old guys haven't figured it out. But I think this is amazing. Bro, Goolsby, he have like a bright red phone. Like, you know what I'm saying? Like, this looks like a prop. Like, he have a bright red phone. Oh, and we have a bright orange peach. Brought to you by Bradley Frizzle. Are you kidding me? Oh, my goodness. Ladies and gentlemen, boys and girls, Bradley Frizzle and the peach. Oh, no, let's go. Oh, my, are you kidding me? Are you kidding me? God bless you. Thank you, Bradley Frizzle. We needed that. Wow. Maybe that's why the sound wasn't coming through. The peach was making way. Aren't peaches pink? I think peaches are orange, sir. I don't know. You may have been scammed your whole life. Yeah, I thought that was an apple. What do you mean peach isn't orange, huh? Oh, man. Wait, no, peaches are peach. I didn't think about that. Peach is a color, huh? That's crazy. All right, going lower here a little bit. SPY about to hit a new low. NVIDIA flushing out of nowhere considering how all the other chip stocks have moved here. Pfizer dumping. Microsoft, that Copilot news didn't affect it. Yeah, Pfizer down to 26 again. NVIDIA still green, but literally into the low. IRM, meanwhile, is like, woo, we made it. I think Vanny's still holding. Tessie on the low. Apple iPhone 15 sales not doing well. That was in the morning. We had some of that.
So welcome back, everybody, to another webinar organized by Princeton for everyone worldwide. We're very happy to have Austin Goolsbee with us. Hi, Austin.
Right.
Hi there.
Bonds going down.
Austin is the president and CEO of the Chicago Fed, and he will talk about monetary policy in this unusual time. So we will run something special today.
JK, baby, God bless you.
What is the unusual time? So when I think about it, three things come to mind. One is soft landing. So we have a vertical beverage curve. I will talk about that. And then we have a lot of monetary policy changes without monetary policy moves. And then also we have, in the long run, more structural, we have a different fiscal situation. The debt level will be much higher. What are the implications of that?
I commented on there.
So let me start a little bit to talk about soft landing. So we have a huge decline in inflation without a recession, and that's very uncommon. We had an earlier webinar with Alan Blinder going to the history of soft landings and non-soft landings, hard landings. The question is it primarily because energy prices just went down? We were lucky about that. And supply chain frictions were lifted over time, or is it really monetary policy which moved it? The other thing is we still have a continued labor shortage. That's the case despite this huge immigration in the United States.
Well, bonds kind of dumped pretty big there. So
and also in Europe, where
bonds were going to recover
some
a little
countries
bit.
There's some recession, so the economy is not growing so fast. But nevertheless, there's a labor shortage. This might also be because the COVID situation has changed the attitude of working from home and other different labor arrangements. But concerning the beverage curve, which is the labor market from a monetary policy perspective, you have on the x-axis you have the unemployment rate, and on the y-axis you have the job openings, the vacancy rates. And typically, when the unemployment is high, there are few job openings, and when the unemployment is low, then you have a lot of job openings. So it's a downward sloping, and you see this, during the Great Recession, after the Great Recession. And the red line here is how the beverage curves looks like this. And we're currently in the last year, we have the soft landing. You see a vertical decline in the job openings.
And the bonds came down here
but
too now.
Not an increase in the unemployment rates. So that's a new phenomenon. It's like a soft landing phenomenon.
This is a setup where maybe bonds sell off
some
end of the
extent.
day,
We have to explain why this happens.
Market just still stays up.
But there are also other commentators out there who think we should not
IRM had really
so
good
much
earnings.
weight on vacancies because just leaving a vacancy open, just let it stand there is very costless. But removing a vacancy and then reopening a new vacancy later on is very costly because HR systems are set up this way. So perhaps the vacancies are less meaningful, but overall we see in the beverage curves a very, very different phenomenon, and that's unusual. Let's put it this way. A second thing which is very unusual is that, since the summer of last year, the policy rate has stayed pretty much constant. But if you look at the term spread or the long-term interest rate, it moved dramatically. So term spread went up significantly, almost 100 basis points in the last summer to the fall, and now it came back down again. So even though the policy rate hasn't shifted much, Wall Street's attitudes towards the longer rate has shifted a lot, and hence people borrow on a longer term interest rate, not on the short term policy rate. The financial conditions had softened and tightened first and then softened. So there was a lot of policy moves without policy tightening changes without policy moves. And the third, I think is not so common. It's quite uncommon around. The other thing which is unusual in a sense is that we have unusually high debt, and even projecting forwards, we have a high debt level. So if you look after the Second World War, of course, we had more than 100% debt to GDP ratios here. That's from the CBO, the Congressional Budget Office projections. And then we had a huge increase in the debt level, also then the COVID spike. Then inflation brought the debt to GDP a little bit down because real debt was inflated away, but the projections going significantly almost to 200%. Given the current projections, given the current fiscal rules and current government laws. That raises a question, will this in the long run, who is determining the long run inflation? Will it be the monetary authority or the fiscal authority? And will there be more interference from the policies of policymakers to central banks and hence undermine central bank independence? Will there be a fiscal dominance regime? In particular, when the debt level is so high, an interest rate increase by the Fed will actually lead to huge government expenditures. And of course, they have to cut back other expenditures. This is very unpopular, and there will be pressure on the Fed not to raise interest rates. So the fiscal dominance might be a threat, and that's something one has to take into account as well. Of course, to determine how the inflation then will be determined, one theory is the fiscal theory of the price level. And typically the equation is that the value of all outstanding government debts in real terms divided by the price level, so that's the real value of all outstanding debt, is just the expected present value of primary surpluses. Like typically when we price assets, we use cash flows. Here we just use primary surpluses. That's what the bond holders get. But there might be a bubble term because the primary surpluses going forward, they're all projected to be negative. So how can it be that the treasury value, real value of all the US treasuries is positive? It's because there is a bubble term as well. And the question is, how stable is the bubble? Is there danger that the bubble might be bursting? And so there might be additional uncertainty coming up on this dimension. That might also be leading to unusual times. So with this, I would like to go to the poll questions, and I'm grateful to all of you for answering the poll questions.
CRM going up.
The first question was the Fed policy key in reducing inflation? And the question is yes, because if the Fed would not have hiked the interest rate so sharply, even though it was late, the inflation anchor might have broken. Or was it no? Actually, it would have come down anyway because supply chains were repaired, energy prices came down, and so forth. And the answers were 76% thought actually it was the Fed making sure the inflation is coming down. Only 24% thought it were other external effects. Second question was, is the strong economy, the strong economic activity a sign of overheating?
Bro,
yes
it's
or
been
no?
like 5 minutes of questions.
16% thought it was a sign of overheating. No thought 84%.
It's going to be good, though.
There's no sign of overheating according to our audience. The third question is about the persistent wage growth. Will this prevent the return to 2% inflation? Is the last mile of going down to 2%, is this the hardest? And here it's a yes or no. It's 42% yes and 58% no. Fourth question, higher than expected trend productivity will continue. Yes or no? Yes was 55% and no 45%.
Bonds coming back up, SPY still same spot.
And finally, the final question was, is risk in the monetary policy changes if it changes asymmetric? So is it loosening too early? Is it more harmful than loosening too late? That's what 51% thought. So a majority, a slight majority for that. Loosening too late hurts more than losing too early. That's 30%. And its risk, the risk is symmetric. It's 19%, almost 20%. So is the majority, I would say, slight majority, is that you shouldn't, losing too early is the more dangerous thing to go. So there's an asymmetric distribution on that. So with this, I pass on the mic to Austin, and we're looking forward to your take.
I just gave you 15 different questions, Austin.
Thank you, Mark. To go with this unusual time rather than emphasize monetary policy from unusual people. And I would expect no less. I think your viewers and listeners' votes show them to be quite sensible. Some of what we're going to go through here, I'm going to emphasize in a way it's going to then become a straw man. But there are people who think differently than your viewers. Let me start with a couple of
we think a little differently
slides. I guess I would say I'm going to do 2.5 things. If I can get this to work. I want us to think through this, what just happened in 2023. And that corresponds to the year I was on the FOMC. I started at the Chicago Fed in January of 2023 and was a voter on the FOMC. Went to the first meeting like 1 to 2 weeks after I started. It was an extremely unusual year, Marcus, as you highlighted. I started early in the year calling the possibility that you could get a really substantial drop in inflation without a recession, more than just a soft landing. I started calling that the golden path, and that though there were many people saying such a path was impossible, there were weird elements of the year 2023 that might make it possible. And as we look back, it was an amazing year for the dual mandate. We're going to look back on 2023. That was kind of the golden year. But the key thing is, well, what does that mean for 2024? Were the supply chain issues, the labor supply issues, the productivity growth, are these things that were one-offs that enabled 2023 to be as good as it was, and we should stop expecting that rolling forward into 2024, or how do we think about it? Second, I want us to think about this question you raised in your poll about inflation expectations, the role of the Fed, and how much the credibility of the Fed was an anchor that allowed the golden path to be realized, if you will. And if we have time, I would be remiss as long-time listener, first-time caller, not to talk to Marcus himself about non-bank financial institutions and whether that colors our ideas about monetary policy transmission. Okay, so first let's just think about 2023 and the golden year, the golden path, something about the inflation dynamics. We had a huge decline in inflation without a recession, virtually unprecedented. We had many very serious economists and friends of mine, you'll remember, Marcus, 1 to 1.5 years ago saying, cannot be done, impossible. If you're going to get inflation down in any significant way, virtually all central banks have had to have pretty serious negative medicine to do that. And here are just some measures of core PCE inflation over time. And you see, we've got a really substantial drop. And even with the PCE data that came out this morning, which show a month of rebound, I think you want to be careful extrapolating this little part. This might go back up a whole bunch. The main thing to see is that we had very substantial progress over a long-term basis. And if you have floating around in your mind
Mara on the low, I don't know about Coinbase either.
The thing that makes
ACAM, they have
2023
earnings after the bell.
quite different is if you take change in core PCE inflation on the right to left axis and a measure of the unemployment gap between what is unemployment and what is the estimate of the NARU, let's say. And we can use whatever measures you want. It's going to show the same thing. 2023 has among the biggest drops in inflation on an annual basis in the modern history of the Fed. And it's way down here in the bottom left corner, which is sort of not supposed to happen, where unemployment is below the natural rate as people expected, but we're still getting very substantial declines in inflation. And it's worth also remembering over here, this wacko point is also coming out of COVID. So there is a sense in which the immaculate disinflation follows at least partly the immaculate inflation. So there is an argument that this is basically just supply chain repair. And if you believe that it's supply chain repair, there are even people saying, the Fed had nothing to do with it. That basically all that happened was the supply chain was damaged and now the supply chain is fixing. And there is some element of truth to that story. And we're still engaged in a kind of a religious war over understanding the inflation of 2020 and 2021. It doesn't come from excess fiscal stimulus, excess monetary stimulus, and that it's fundamentally a demand side story, or is it this supply side story? Now, the thing that I want us to note with the supply chain, this is an index that the Federal Reserve Bank of New York puts out, and it's just a kind of a quantification of what you will see out in the reserve banks. We talk to local business leaders all the time, and their anecdotes, many of which are repeated in the beige book each FOMC cycle, they just kind of track these measures. It's true that this thing comes down substantially, and now we're back to zero. So there could be an argument that's done. The supply chain is now fixed. We're sort of back to the pre-COVID times on the supply chain. So whatever happened in 2023 is over, and you shouldn't expect any more benefit as you go into 2024. Be a little careful with that argument, because one of the things that I would characterize that we learned how team transitory, which is now translated into team supply shock, got the timing wrong was failure to appreciate the persistence of inflation, I think, by these spillovers from the supply chain has a bunch of steps in it. And so as it started to go wrong on one stage, then it would move to the next stage and move down the supply chain. And that added a persistence of moving through the supply chain that we had not expected. We came into it thinking, hey, if it's a supply shock, it's going to go away in 3 to 6 months. The San Francisco Fed, there's some research out of the San Francisco Fed that just tries to do a supply chain impulse response. And it has all the pros and cons that you would expect. But the idea that when you get a supply shock, its impact on the economy and on inflation particularly is not instantaneous. It takes some time to work its way through, call it a year before the supply chain works its way through. And one of the stark realities that we learned through the pandemic is this isn't a 2-month, 6-month process. It takes a long time on the way up. But my argument or slash question is, shouldn't we, as we look at this, if we're just getting to zero in the fall of last year, and this drop took a while to work its way through the economy and end up in disinflation, doesn't that same persistence argument that explains why the inflation was higher for longer than we thought it would be, doesn't that also suggest that the benefits of the supply chain repair will outlast simply when the index gets back to zero? And I think it might. And then the second thing I'd say is I have been saying all along that a bunch of the supply shock wasn't just the supply chain, wasn't just energy prices. It was fundamentally, in large measure, about a labor supply shock, first negative and now positive. And what I put up here, it comes from a paper. We have a sort of a predicted trend of where labor supply was supposed to be now. Labor force participation is substantially higher than it was expected to be at this point. And people can get themselves twisted in knots a little bit. There's one tendency, some people say labor force participation is still below what it was before the pandemic. And that is not incorrect. That is true. It's just, remember, the population is aging, the baby boom is retiring. It wasn't supposed to be back to what it was pre-pandemic. It was expected to be something much lower. So we're way above what the trend we expected. I think part of that, Marcus, is immigration.
This trend is calculated before 2020. It's a long run trend.
I believe this trend is calculated before 2020. I have to go back and check it, but it is a long run based on demographics, age, immigration, trends in labor force participation status of the various age and demographic groups, what you would expect it to be. And whether you accept this model, which came out of research done at the Chicago Fed, or a different model, it's just important to realize the standard that you should measure labor force participation against is not what the level was pre-pandemic, because there are a series of demographic trends that suggest that thing should have been falling. Now, I don't want to just say this is all supply shock, because as you highlighted, it's a tight labor market. And in tight labor markets, like here's pre-pandemic, in a tight labor market where wage growth is high, it's going to pull people into the labor force. And it's not the way to think about that is not a labor supply shock. That's if the price is high, you're gonna get more supply. So there is some component of that. But I think that there was a major negative shock to labor supply from the pandemic, that's unwinding. So that part of the positive supply shock is on labor supply. And the thing about labor supply is I think the lags, I haven't seen an impulse response for a labor supply shock, the equivalent of the one for the supply chain, but I think the lags are longer. And that kind of brings me into my, is it an old saw? It's kind of an old saw, or at least a repetitive saw. I've just been saying it over and over. Be super careful about wage price dynamics when using the wage data to predict in the near term what's going to happen with inflation. I appreciated that your listeners and watchers, Marcus, did not fall prey to this issue that if wage growth is above X, then that means inflation cannot come down. In the long run, we basically believe that inflation is going to equal wage growth minus productivity growth. And we'll get to the productivity growth thing in a second. But the question is, the wage growth observed consistent with target inflation? You got to remember that we think wages are stickier than prices. So you got to be really careful. If a shock hits, prices will go up, then wages will go up. Then prices will come down, then wages will come down. And you want to be very careful in the short run saying, but look, wages are high, so prices can't come down. There was a lot of discussion like that at the end of 2022, that wage growth is high, so there's no way price inflation can come down because labor is 3/4 of the cost basis for a lot of these industries. And yet it did come down. Price inflation did come down because I think when making that argument, that's a long run steady state argument. That's not a short run dynamics argument. And this whole discussion where we kind of had an argument about this informs, I think, should inform our thoughts about how long will, if we are getting positive labor supply shocks, should we expect that to last in an impulse response sense even longer than the impulse response from improvements to the supply chain? And I kind of think that we should. And this is a fun literature, and a lot of it is cited in this paper by Gotti and Wojda, which came out of here at Chicago Fed, and I refer folks to. But it's fun to think about those. Yeah. What'd you say,
Peter Kahn
Marcus?
is asking a question from the audience. There's a huge surge in immigration. Do you think it also played an important role?
Yes, absolutely.
Look, and how do you see this going forward?
Well, I think of that as a labor supply shock. Mm-hmm. And we had a huge negative labor supply shock at the beginning, even starting pre-COVID from policy changes. But in COVID, there's immigration drops to zero. That's something like the majority of labor force growth in the United States in the pre-COVID period is immigration.
Celsius, though.
And now we've had a rebound of immigration to at least at the flow level.
SPY is coming down, and a couple of chips and
every
big
bit back to what it was pre-COVID.
NASDAQ not hanging on as well.
It didn't overshoot to refill the hole that was lost, but I think that rebound of immigration is part of
$500 million deal
labor supply that's coming into the market. And I do think that even if you think immigration cannot go up as much as it went up, it went from zero back to where we were. It's not going to go up
and then Vanny's
that much again. It's still worth thinking of
that ENVB still holding.
How long is it going to take that to wind its way through the economy? And I just think there's a dynamic component that it's
do you think there will be a challenge too, because the composition of immigration, how much high-skilled computer scientists are coming in relative to low-skilled workers? Do you think that has implications for inflation too, or that goes too far?
I don't mean, what do you think? That's clearly relevant for the wage distribution and for income dynamics. I don't know how much of what the magnitude is for the macro economy. What do you think about that?
I think it's primarily a distributional thing. So you will keep the low-skilled wages lower, and the high-skilled wages will go up further. And that might be causing tensions in other dimensions. But typically, high-skilled wages, they have a lower marginal propensity to consume, so the inflation implications are probably not so dramatic.
I see. So for the business cycle, that sounds plausible. It would definitely be worth somebody doing some research on that.
But in terms of, there was this high inflation of 10%,
we were at the
which
same price
eroded a lot of purchasing power, and you have to have some catch up later on. So do you think we caught up already fully, or we still have to catch up?
Now, you know what?
Just for the catch up element.
I'm gonna call an audible here and go into my appendix, and let's just think about let's think about the composition of core inflation. The thing to remember is
4-week bill
in
auction
this
about to come
pre-COVID period,
shouldn't move us too much.
We were at the target. We were actually below the target. So it can be a little more inflation than what we saw pre-COVID and still be perfectly consistent with the 2% target. But the thing to remember is if there's housing, services, and goods, we were at or below 2%, not by everything being at 2%. Okay. Goods were at